Gold just hit an all-time high of $3,500, and then this happened. This being the price fell. Now we could say buy the dip, but what's the dip? Is it 3,499? Nope. We're seeing a pullback in the price of gold. And maybe it came on as a little bit of a surprise because all we've been seeing lately is the price of gold going up. But we have talked about this. We talked about the swing and risk appetite and the idea of a summer pullback a few weeks ago. So it shouldn't be totally unexpected, and this does not mark the end of a rally. Haven't seen anybody try to suggest that. So there's actually an opportunity here, and there's even a strategy that I like to use personally that might actually be coming back into play. Now, if you're long on gold and not just a trader, you might think any pullback in price is a buying opportunity. Maybe that's your strategy, but I'm talking about more than that. I'm talking about significant drops in price that don't happen often, the kind of drops in price that might actually make it worth buying more. Let's get a quick shout out to channel sponsor Summit Metals. If you're looking to buy gold and silver, they've got a great place to do it. SummitMetals.com. So let's get specific here for a minute. We know the local high for gold is $3,500 because we just hit that this past April. That's also the all-time high. Now, prices are high enough that I have slowed my buying down a little bit, but I'm already ahead of a running goal. That has a big impact. If I wasn't, I probably wouldn't have slowed down as much, but regardless, I'm buying a little bit every month. Now, if the price were to drop significantly, say 10 or 15%, that would get my attention. A 10% drop would be 3,150. A 15% drop would be 2,975. Just to get specific to what I'm doing for a minute, I have just started buying quarter-ounce gold coins again. And that's a change for me because I've been buying 1-ounce coins to keep the premiums low, and the high spot price was slowing me down. Now, I've mentioned the premiums coming down on just about everything other than this, but it looks really nice. Now, if we saw a 10% drop, so down to $3,150, I would buy back up that month. So maybe it's an ounce of gold, maybe a little bit more, not a lot. But if that drop were to hold, then I would continue to buy a little bit more than normal while it lasts. Now, if the price drops 15% to $2,975, and really at that point, just anything convincingly below $3,000, that is a bigger event for me. Now, I'm not sure that I'm backing up the truck at this point in the game, but this would be as close to that as I get personally. Now, I don't see a drop below $3,000 holding long, so I'd be more than happy to take advantage of that, buy more, and then slow back down when the rally kicks back in. This idea needs a little bit of explaining. I'm going to try to do it with a chart because it seems like buying at any point when spot is lower than it is today would have been smart. I've mentioned $2,000 feeling high. Well, look at us now. This chart shows a few of the triggers that got me to buy more. I made big purchases in early 2021 and late 2022. You can see how that plays out here. In August of 2020, that was the first time the gold hit $2,000. That slowed me down. But a few months later, when we hit the 1700s, I caught back up. Probably I got ahead. Now, 1700 was a 15% drop from that local high of 2000, and then we saw the price build back up near $2,000 over the next year after that drop. Now, the next 15% trigger happened in September and October of 2022. It actually got down to the 1600, so another 15% trigger. That was a big buying point for me, and we haven't seen a significant fall since then. So big buying point for me. What does that mean? Well, let me get specific. In 2021, I had a goal for how much I wanted to buy, and specific amounts are always a distraction, but I'm just going to say, for the sake of easy math, 12 ounces. Now, if I would have bought 1 ounce per month, I would have spent $24,770. I'm going to flash the numbers here on the screen. That's the average monthly spot price, which totals up through the year to about $23,150, and I'm using 7% for a premium, which was high, but that's what was happening at the time. Now, because I bought half that amount in March and April, and then the other half later in the year, well, I spent $22,440. Again, I'm using 7% premium. I did buy some collectibles in this period of time, but that wasn't in my goal, so I saved $2,330, and like you might have guessed, I just bought another ounce of gold. 2022 worked out to be more or less the same. Now, back to this idea of just always buying. There's really nothing wrong with consistency, just keeping at it. That's why I think it's a good idea to find a base cadence like what I've mentioned with the 1/4 ounce of gold a month idea. Like I just showed, though, if you add some buying triggers to the mix, you can start to see how this can make things more effective. Buying in February of 2021 was 15% cheaper than buying just 6 months earlier in August of 2020, and actually more because demand was pushing premiums higher, and premiums are a percentage to begin with. So if you catch the drops, you end up with more gold. Now, the obvious thing here that needs to happen is you need to hold back some capital to get there. You hear me say I slow down? Well, that's why. If we had endless capital, well, this whole thing would be a lot easier. We'd just catch all the dips. What most people do, though, endless capital or not, is buy when things are interesting, meaning you buy when everyone else is, which means you buy the top, and then disappear when the price drops, effectively buying at all the worst times. That's the wisdom of the crowds. That's what most people do. Now, speaking of mistakes, and other people's mistakes, of course, we're way too smart for that. One would be waiting for that perfect bottom that just never comes. So let's look at the chart again. By November of 2022, the price was taking off again. And if you thought, hey, I'm just going to hold out for the price of gold to go back to $1,750, well, then you missed buying at $1,800. You missed buying at $1,900, at $2,000, and you saw gold run all the way to twice that amount. And you missed a lot of buying opportunities. Imagine being able to buy at $2,000 today. So those 10% and 15% triggers that I mentioned, well, those are based off local tops and they need to be updated or you get caught waiting for something that never comes. So this isn't about calling tops. It's not about calling bottoms. It's just adding some triggers that you can predict because it's just math. It's hard to say how far a rally is going to go, how far a crash will go, or even just a dip will go, but 10 and 15% markers have just always worked out well for me. Now, to me, this is a long game, but if you can catch a few opportunities along the way, they can make a huge difference. So let's call it good there. Let us know what you think. Do the recent swings have you looking for specific price points, maybe $2,975, or who knows? Maybe you're still waiting for the big one, $1,750. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.